Good evening, I'm Brigid Taylor and this is Currency Wars. The US Treasuries have steadily weakened this month, with the 10-year having risen to levels just below 2.55% after closing around 2.35 at the end of August. Behind the rise and the strengthening of the dollar is likely to be additional speculation around the timing of the Fed rate hikes and a potential pushing forward of these timings. In response, the South African bond yields are shooting much higher across the curve. The benchmark 186 is now some 15 basis points higher since the day of the ECB decision, and the long-dated R2048 is roughly 20 basis points weaker over the same period. Emerging market commodity currencies were hard hit on the weaker than expected Chinese import growth data this week. The rand broke above the key technical level of 1087 to trade just above 11. Emerging market assets have come under pressure as the divergence between the Fed and the ECB begin to take shape in the mind of many market participants. And the expected divergence is being fueled as Fed funds futures give the impression of rising back to their July highs. Despite better global growth in the second quarter of this year versus the first quarter, the South African trade data balance deteriorated. The South African Reserve Bank sees the scapegoat as structural impediments coupled with the declining commodity prices. The trade deficit widened by 26 billion rand to 101 billion rand, and this as exports fell 3% quarter on quarter. Despite an increase in the average price of Brent, the imports also fell 1.4% quarter on quarter. South Africa's current account deficit widened more than expected to 6.2% of GDP in the second quarter. This was much larger than expected and attributed to the trade deficit and a large rise in income receipts in the first quarter. This is proving unsustainable into the next quarter. Of concern is the level of inflows when annualized, which remains well short of financing our current account deficit. Now that we know the lay of the land and we know the news that is making headlines, I'm joined by Anthony Grant from RMB and Andre Cilliers from TreasuryOne. Welcome. So let's kick off this week. It's been tumultuous for a change, because I think the last time we were together we were talking about the ranges, the rand's doing nothing. We're seeing a bit of movement in the euro rand, we're seeing a bit of movement in the pound rand. However, this week certainly was a resurgence of those underlying fundamentals. So maybe to kick us off, Anthony, what did RMB think about the current account numbers that came out?
So they were worse than expected. I mean, I think we were a little bit more bullish than the market, expecting probably about 5.3%.
Wow.
I think the market was at 5.5, so coming out at 6.2 certainly was a negative number. And amidst all the dollar pressure, getting the negative fundamentals on South Africa certainly pushed the rand through that key 1088 level. It was kind of stuck there, and there was good resistance, and it kind of went straight through.
So it certainly was something that just brought us back to reality in terms of those underlying fundamentals we've been talking about. And I mean, we've spoken about it on this show and just saying South Africa's almost being like that little kid in the corner. Nobody's really paying attention to him. Yes, we know he's been very naughty, but let's just leave him and we carry on playing. However, right now, La La Land is back to reality. The Chinese data showed us once again that, they're slowing down on imports, that push pressure on commodity-based currencies. The dollar US Treasuries have rallied, so if we look at 2.5%, obviously pricing in a potential for a rate hike in the US, and on top of that, our underlying fundamentals. Andre, where do you see the rand now that we have broken through that 87 level on the rand?
Where do I see the rand going from here? Well, I think what happened at this point in time, and last time I spoke about the car caravan situation with the car being the drivers, and that's the focus on the euro and the dollar. And we've lost a wheel in this week, so we are being left behind a little bit. And I think for the moment, because we're being left behind, the rand's in a little bit of turmoil, but I think we'll replace the wheel and then we'll be carrying on again. But at the moment, we most probably changed our ranges a little bit. And we are going to see a little bit of more turmoil at this point in time.
So we've broken through that 11 level. I mean, we traded 11.02 and it's slightly stronger again. It's still sitting around that 11 handle, and as we all know, I mean, the big figure's always something that's a mind changer. So if we break above that 11 level, 11.05, obviously we are on the top side of the rand. We've got MPC next week. If we look at the foreign flow, so one of the interesting discussions that we had previously is looking at foreign flows into South Africa, both from funding the current account, as well as the fact that it obviously does help to support the currency. And previously we saw the currency within those ranges. Why? Because there was still that hunt for yield, especially post the ECB decision. However, that sort of started to erode as emerging markets have come under the spotlight again with regards to the underlying fundamentals. So if we look at the outflows that have happened, we're seeing it in our bond markets. What is your view in terms of the MPC's likely stance around the fact that we still need to retain those foreign flows and interest rates where they currently sit?
So the unfortunate part at the moment is the economy isn't rebalancing as fast as everybody would like. I mean, we all know it needs to rebalance to sort out the current account deficit, but at the same time, exports are under pressure.
Sure.
So we're just not getting that rebalancing, and it's showing in the rand. Our interest rates and I guess emerging markets will be very key as to what the Fed minutes say next week as well. You know, will they be hawkish? Will they be dovish? Because any sign of US increasing interest rates sooner than expected will certainly put pressure on the rand. That puts pressure on inflation, which probably also puts a bit of pressure on the SARB to hike. And you don't want to get too far behind in that cycle. So certainly just builds pressure for an interest rate another 25 basis points.
So if we look at it, the potential for that 25 basis points, it's quite funny that we're talking about 25 just because of the last decision, when previously we were always talking about 50 basis points. However, even the 25 basis points means that we potentially put up interest rates 0.5% over the last year. Do you think that that's enough to retain foreigners' interest in South Africa despite the underlying fundamentals?
You see, I need to say here that I don't think that we should just look at interest rates and a 25 basis point hike or a 0.5 basis point hike or whatever the case might be to attract funds. I think we should look at the structural imbalances behind the current account deficit that needs us to attract funds to actually fund that. We need to address those structural imbalances, and interest rates is just not enough to do that. So you can push up interest rates to 12%, you can push it up to 15%, but if you remain with structural imbalances inherently in the country's economic situation, then I don't care what you pay me, I won't put my money there.
But that's
so that was what we need to address.
That. And I think, the concern for me, Andre, is, and I think you're right, I mean, we talk about foreign direct investment, which is your longer term infrastructure. Ultimately, it looks at infrastructure, it looks at the potential growth. All of those things in South Africa are big X's in the boxes. So if we look at growth projections, not looking great. If we look at underlying issues around employment, not looking great. If we look at infrastructure, not looking great. So from a foreign direct investment perspective, that's not something our MPC can handle. That's more a government infrastructure type scenario. So yes, you're right. I think from that perspective, we can expect South Africa to remain on the back foot. However, one of the areas that we have seen continued support in South Africa is that hot money, as we call it, so the short-term investment. However, that's starting to erode a little bit as people start focusing on the fact that we might see hikes out of the US. We've seen Draghi talk about keeping rates relatively flat, if not slightly lower, in the Eurozone. However, that money doesn't seem to be filtering into South Africa. It filters into other jurisdictions, and emerging markets, in fact, haven't benefited from that latest decision. So the concern is, how do we continue to fund the current account deficit if we're not attracting foreign direct investment, and if those hot flows start to deteriorate? Because that's a very big risk in terms of our rating outlook. So what is your view in terms of the longer-term picture with regards to, obviously, the currency on the back of the foreign investment into South Africa?
Well, the currency, if you have a look at a very long-term view, Bridge, I mean, it's been weakening over a long time. If you look at the trend, we'd have to break 1070 for it to start strengthening again. If anything, on a long-term view, we should test 1140 again before we test anything else. I think South Africa's always been resilient. I think we've got a good financial market, financial institution. So I do think, at the right interest rate, investors will still put money into South Africa. Maybe there'll be a bit of a move from the bond market into the equity market. I guess we'll just have to see how growth pans out there. But the rand, unfortunately, if we aren't attracting those funds and the current account deficit isn't coming down, we'll have to do the rebalancing.
Right, now that we know where we stand and the real risks and opportunities, I'm going to ask you guys to pull out the big guns and look for some levels. So let's look at what we've been faced with. We've had the current account deficit that's come out. It's resurged the concern around emerging markets, particularly commodity-based emerging markets. So changed our view in terms of that range-bound rand. Let's talk about the cross rates. Let's talk about the rand from an importer and an exporter perspective. I'm going to ask you, Anne, to start.
So Brigid, we tested 1101 yesterday, and we've kind of come down back to the 1096 level. I think the rand's still going to look for direction next week from those Fed minutes. So if they are positive for the rand, we could get back into those ranges, back into those broad, 1060, 1080 kind of range. If it's not, we're certainly going to test 1106 and then on to test further levels. So I think it's very dependent on next week, but we would need a close under 10.96 to get back into the range, a daily close under 10.96. On Euro Rand, probably 14.20 is probably on the top side. Look to buy there, and then 13.80 on the downside. Those are probably the key levels and the ranges that we would look at the moment. I don't know if you want Euro Dollar, probably the 128.50 on the downside, and 130 on the top side. Also very dependent on what's going to happen next week with the Scottish vote. It could be very impact on the pound as well as the euro.
Awesome. So there's quite a lot of news and obviously things to watch out for in the system. From your perspective, Andre?
I think emphasis is on next week and what happens on the MPC, but I would think that the Rand will remain within a range of 10.85, 11.05. I don't think it breaks out of the 11.05 above that. So from a exporter point of view, I would sort of look at making use of these levels and get some of my forward cover in. The forward points is still hugely your favor, so I would certainly look at that. Importers, I would be cautious to take forward cover for too long a period, and I would remain only covered in the very short term, because I do think that the Rand comes down. Cross rate wise, place the euro still under pressure, and I think we're heading back towards the 14 and sub 14 levels, pound towards the 17.50 levels again.
So in conclusion this week, the trading strategy, according to our guests, is look for a level of 10.87 on the Rand to still form a major support. However, that 11 handle is proving to be quite interesting, especially for our export sector. 11.05 potentially trades again, and if we break through that 10.96, it does open up 10.87 on the downside. However, a break above 11.05 potentially opens up 11.20. On the Euro Rand, look for potential downside once again below 14 Rand. However, this is a market for exporters. So importers, be patient and watch out for the decisions next week from the MPC and the FOMC. Please feel free to send your questions or comments to @CNBC Africa, #CurrencyWars410, or myself at Brigid Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.